Hello everyone, happy to meet you all once again through this video. Today I'm going to talk something important to you and which is actually happening what we see as of today. And the topic is why and how the rich become super rich. Let's read the question again. Why and how the rich become super rich, right? So let's see the cycle. Let's start with the red arrow. This is what is happening currently. The rich inflate an asset's value. Example, cryptocurrencies. We have seen in my previous videos that the big hedge fund managers who manage trillions or billions of dollars park 1% to 2% of their portfolio into bitcoins or other cryptos. So that moved the cryptocurrencies value high. And what happened is, since the Bitcoin started to rally, the low earners or the retail investors who are greedy or try to make some quick money get on board, and then they see some gains, or they may lose, right? So they see some gains predominantly, and then they started believing that their investing rationale on cryptos is right or any other asset is right, and then they start buying more of that particular asset. They become more greedy, they pump in more money, thinking that this is going to make them millionaires in a very short time. And then what happens is, since the asset values have been inflated, the super rich sell off their assets. They just sell off and book profits. Now the retail investors who have bought the asset or cryptos after the big fund managers who have essentially bought it at a high price, and then when they sell off, the price drastically drops, and then they get trapped at a loss or they have to exit the trade. So if you see, this is one of the beautiful way where the money is legally transferred from retail investors or low earners to the super rich, or the rich who become super rich because of more and more money transfer. This is one classic way where people lose money, maybe real estate, stocks or cryptos, any asset. This is how the market movers transfer, or legally they take your money away. Unless you have a strong investing rationale and the portfolio sizing, my recommendation is do not look at cryptos at least for now. Again, as a disclaimer, I'm here to say that I'm not against cryptos or any other asset. All I'm saying is you have to be mindful and having a proper rationale on why are you doing it, and do it only when you understand. So the stories from super rich, about the stories of super rich, let's say somebody becoming a millionaire or billionaire in 1 month or 2 months or last 1 year, this all will gonna make you more and more greedy. So the key takeaway is financial literacy is not just by investing in stocks or you buy a crypto, and that's not financial literacy. The real financial literacy, or the ways to become rich, is actually many more things are available. For example, there are people who have held bonds, bought bonds, and then get some more passive income, and then they have become millionaires. So it's nothing new. Bond is one of the biggest asset class that people can actually buy some bonds and be happy. It's just that it will not move as fast as stock or a crypto, but then there's no fall in it. Technically there's no fall in it, right? So next is cash flow and dividend investing. People buy stocks of big companies who pay regular dividends, and then they're happy with the cash flow. Real estate and estate management, business management, people who own and manage their own business, and then entrepreneurs who are trying to create new products and make lives of everybody better. And there are many more such methods under which you can become rich. It's not just by stocks or cryptos you'll become rich, right? So there are many options available. So the takeaway from this video is, if at all you choose to invest in cryptos, portfolio sizing is essential. Do not remove all your bonds or sell off your stocks and then put everything in crypto just because it's moving so high and you'll make quick money. So just be very careful. Probably 1 to 2% of your portfolio will be good enough, and then don't become greedy chasing too many cryptos like Dogecoin or Ethereum or Bitcoin or what. There could be new ones coming up. So don't chase everything. Just have a simple crypto portfolio. Sorry, cryptofolio is something like a portfolio is become cryptofolio. So that's why I said it. So do not chase returns, and then don't hold too many cryptos. Make it simple, and then buy and hold for long term if at all you have a proper investing rationale. And the most important thing is, don't go based on tweets. The big whales like Elon Musk or somebody could make a tweet saying that I'm dumping Bitcoin today, I will buy something else, and don't go chasing these guys, because these guys are market movers. They could do anything with the amount of money what they have in their hand, and etc. Right? So be safe, take safe, proper investing rationale before you choose to invest in any asset, and invest only when you understand. Like Bitcoin, do you understand that fully, where it is used, how it is used, what regulations of being governing that, etc., and where it is used, and how does the asset value go up? So unless you know all these things, it's better to stay away from it, and educate yourself to become more financially literate, right? So I'm going to show some quick slides or quick news about what's happening in the crypto industry, just to show you how volatile the cryptos are. All right, that's Bitcoin's price. So Bitcoin, the US market is open, and the prices have started to move. People have started to trade, and for your information, Bitcoin has always been traded 24 hours. So if you look at it right from its inception, like all I can see in this graph is 2015 to now, it has given 10,000% return. And then if you look at 1 year, it's given 248%. If you have held $10,000, that is, the one Bitcoin was $10,000, and then now it is 34. So that's it. And then if you look at 6 months, 91%. Let's look at 1 month. That's interesting. 38% down. In 5 days, 31% down. And today it's 20% down. Now you can see that it's dropping, and then I think that the resistance or the support for particular this Bitcoin stuff is somewhere around 30K. And you can see from 30, 32, people will start buying more, and then it's so volatile today. Unless you have the the financial muscle as well as the capacity to hold, respond to such volatile asset, don't buy it. So I mean, in 5 days it has dropped 31%. And then 1 month, 38%. Like it could go to 50% as well. Let's say if you have $100,000, it could go to $50,000 if it's 50% less, right? So just be careful and mindful of these things when you invest in cryptos, and then don't look at Twitters, because somebody will say, I'm buying Bitcoin, and then Tesla's buying Bitcoin, and then they will say, oh, I'm going to dump it off, and then people will radically buy and sell assets. So unless you're very clear on the investing rationale, don't invest it. And personally, my take, I'm not holding any Bitcoin or cryptos, and I'm not ventured into it. However, I've had this one, like GBTC, the Grayscale Bitcoin Trust. I have acquired like 0.05% of Grayscale Bitcoin Trust, and I don't know when I will sell it. So I'm currently at a loss because I've just got it probably at somewhere at this level, thinking this will be the good support. Let's say 41. So this is somewhere around 42 or 41. That's where I bought, but that's very small, negligible percent of my portfolio. So I don't even care what happens to that. And probably if it dips further, the next support is somewhere around $31. That's same as Bitcoin, right? So somewhere around $30,000, there will be a huge support. That's what it is, and then the prices will start going up. I'm not predicting it, but based on the technicals, that's what it looks like. And if it breaches below $30,000, the next support is 20,000. And if it goes below that, then you can clearly see, let's say 20 was the support, 30 was the support. Let's say it could come to 30K, and if it falls further, it could go to 20K, and then the next support is right at 10K. It has been bouncing a lot at 10K, so probably 10K. That's what it will be, right? Anyways, have a clear investing rationale, and take care, guys. See you all in my next video.